According to Goldman Sachs, it goes on, gold ETFs represent about 0.17% of private U.S. financial portfolios out of roughly 112 trillion in stocks and bonds, indicating precious metals make up a tiny slice of mainstream investments like equities and fixed income. Friday, January 2nd, 2026, Monaco 64, home of alternative economics and contrarian views. So gold and silver are up again. They are on the rampage on the first trading day of the year. That's despite the fact that China and Japan are closed. And what I want to talk about today, and it's to do with gold and silver. One of the major reasons why gold and silver did so well last year is that the Fed is pivoting. It started cutting rates, of course, in late 2024. And they announced in November that they would stop unwinding their balance sheet or doing quantitative tightening. And yeah, I was curious the other day to see where the balance sheet was, and I was surprised. And that's one of the things we're going to talk about. We're also going to talk about allocation to precious metals, because U.S. investors and global investors generally have very small allocations to gold and silver and miners. And I think a lot of them are, that's going to change massively this year. And it's probably not going to be implemented right away, like today or next week, but they're going to start slowly. But that means that a pretty good percentage of hundreds of billions, if not trillions, in assets are going to flow to the sector. So that's what we're going to look at today. So let's start with the Fed, and this is information you can get from Fred. It's assets, total assets, less eliminations and consolidation. And this data is usually published on a Thursday afternoon. Yesterday they didn't publish it. They didn't update it because it was a holiday, but I expect they will update it later on today. But be as it may, if you take the low from December 3rd of $6.535 trillion, we're now at 6.58 trillion. So the Fed's balance sheet increased a total of 46 billion in 3 weeks. We were told, of course, in one of their meetings that they were going to be doing 40 billion a month in QE. So in 3 weeks, they've already done 46 billion. And we've also seen recently, well, as recent as the 31st of December, that they injected almost 75 billion into Wall Street, into the plumbing of Wall Street through repo operations. Is it because the bullion banks were underwater because of the rally in gold and silver? Maybe, but it seems to me that there is trouble out there. We're seeing very little coverage about this, of course, on the mainstream. But yeah, something's going on here. The Fed is panicking, in my opinion. Maybe not publicly, but if you look under the surface, you've got this 46 billion in QE, which is separate from the repo, and another 75 billion, almost 74.6 billion in repo operations, to be exact. That's another thing we need to check today, see how the repo situation develops. It changes every day. These repo operations are overnight operations. So what I'm trying to say here, yes, gold was up almost 65% last year, silver almost 150%, but I think things are going to get even more interesting and exciting for the precious metals, because the Fed and other central banks, they're in trouble because liquidity in the banking system is precarious. Bond markets as well are not behaving as the Fed probably would want. Like this morning, for example, the 10-year yield is up 4 basis points, almost at 4.20. We've got the 30-year yield up 5 basis points, almost at 4.90. So yes, investors are concerned about inflation, and it's not surprising as I speak here, and it's 7:30 a.m. London time, that gold is at 43.75, up 56 bucks, over 1%. And spot silver as well has been above $74, a high of 74.24. We're up $2.30 right now, just below 74, or up 3.2%. And that's despite the fact that the Chinese market is closed today, and so is Japan. So the demand for physical, in my opinion, continues and is relentless. So now let's switch over to the topic of allocation to precious metals investments by U.S. investors. And yeah, that's what I'm going to focus on, but you can kind of translate that to global investors. So I've done a little bit of research via ChatGPT about actual allocations of precious metals in U.S. portfolios, and it says very small share in mainstream holdings. According to Goldman Sachs, it goes on, gold ETFs represent about 0.17% of private U.S. financial portfolios out of roughly 112 trillion in stocks and bonds, indicating precious metals make up a tiny slice of mainstream investments like equities and fixed income. Well, and if we go back as well to September last year, or September 2025, Morgan Stanley, its CIO, started favoring a 60-20-20 portfolio strategy with gold as inflation hedge. So I foresee a lot of other institutions on Wall Street and other financial institutions like pension funds, insurance companies, moving more towards gold as well. So what Morgan Stanley has done, they've gone from 60-40 stocks and bonds to 60-20-20 stocks, bonds, and gold or precious metals. And recently I've also seen that the largest life insurance provider in the U.S., New York Life, they have $900 billion in assets under management. They suggest that precious metals allocation could be up to 20%. Yes, up to 20%, similar to Morgan Stanley. And in their portfolio construction, under high conviction investment ideas, number 8 says, hedging inflation and geopolitical risk with both gold and commodities allocations, considering gold, precious metals, and industrial metals as a 5 to 20% satellite sourced from equity. So there you go. What else does ChatGPT say? Well, professional and individual investors' allocations. It says institutional and advisor holdings vary. Among institutional investors, roughly 50% have at least 1% of their portfolio in gold. About 24% have 3% or more allocated to gold. Financial advisors often maintain allocations or plan to increase them, but typical suggested allocations to gold and precious metals remain modest compared to core assets like stocks and bonds. So this is the summary by ChatGPT. It says, so while there isn't a single official percentage of all U.S. investment assets in precious metals, these points help frame the picture. In practice, precious metals, especially via ETFs, are significantly underrepresented in U.S. portfolios. Around well under 1% of broad financial assets by one major estimate. In portfolio strategy, many analysts and advisors target 5 to 15% allocations to precious metals within individual diversified portfolios. Institutional adoption, a significant portion of professional investors hold gold, but typically at low single-digit percentages of portfolios. So why do I think this is important? Well, I think this is important because if you look at the performance of gold, silver, and the miners in 2025, and you compare them to the stock market, to bonds, it's gonna raise not red flags, but it's gonna catch professional investors, managers, or institutional investors' attention, and they're gonna say we need to put a little into this sector. And we've seen here that there's 112 trillion roughly in U.S. financial portfolios. So even if they just decide to put 2%, maybe 5%, we're going to see, in my opinion, a lot of funds flow into the precious metals. I think last year, a lot of the flows into precious metals and the miners, yes, they were from investors in the West and in the U.S., but a lot of it was central banks. So we could see the start of a new era for gold and silver, in my opinion, and the precious metals, and even commodities for that matter. So even though you're going to be hearing on the mainstream financial media or from naysayers, let's say in the crypto space, that gold and silver are way overvalued and you need to get out, I think it's going to be a different story. I saw that CNBC published an article the other day saying that AI is not a bubble, but silver is a bubble. And I think that's really bullish coming from CNBC. So there you go. With that, I'm going to wish you all a happy new year. And yeah, we're going to keep in touch, of course, as usual. And hopefully you will have a good day today. Take care. Bye.